Hey friends, I figured you would probably want to learn about a home loan program that combines a lower down payment, lower closing costs, and lower monthly payments than usual. I just learned about a unique program that helps with all of those challenges. It's from City National Bank and it's called the Ladder Up program. So you can do it with 3% minimum down payment. There's no mortgage insurance. And at least today, rates can be under 7%, and that's with the 3% down. It also comes with some grant money to help with closing costs, like buying down the interest rate, paying for escrow fees, or other fees that might be associated with your purchase. So that can help with keeping the amount of cash needed down. The amount of assistance ranges between $20,000 and $50,000, depending on the location. So, what's the catch? The program is only available in certain census tracts that meet program guidelines. So, I learned about this program because of one of the homes that I'm working on selling right now. That's at 841 Silver Maple Drive in Azusa. If you want to check it out, message or text me if you'd like to get a list of other homes that are in qualifying locations. We'd love to help you with that. But let's take a look at how this option compares to the Federal Housing Administration, or FHA, loan program that has a 3.5% minimum down payment requirement, and lots of first-time home buyers use it. And we could just use the information from 841 Silver Maple since I've got it handy. I put together a chart here to help compare these two options and to really get the details on your specific situation. You really need to connect with the lender, but I just wanted to give you something that would give you a reference on how this could work. So I've got FHA here on the left, Ladder Up here on the right. So the first point of comparison is FHA requires a little bit larger down payment. Okay, so your down payment amount between the two would be a little bit different, which means your loan amount would be a little bit different. Okay, now one of the features of FHA is that they have this upfront mortgage insurance that's required, and that gets rolled into your loan amount. So then your total loan here is a little over 638, and on Ladder Up, even though you put less money down, your total loan amount is still lower than the FHA loan. Next, a comparison of interest rates. So the average rate on FHA today is 6.5%. And on the Ladder Up program, if you use some of the assistance grant that comes with it to buy down the rate, then you can get it at 6.9%, still with that 3% down payment. And that's a lot lower than a typical conventional loan today. Okay, so the principal and interest payments are not dramatically different. The Ladder Up is even a little bit higher. But where it really gets interesting is here, where you've got monthly mortgage insurance with the FHA loan. So that's 0.55% of this loan amount here annually, and you divide that by 12, and that's how you get this $287 per month. Well, Ladder Up doesn't have that. So that's a big monthly savings there. Okay, insurance is going to be the same, HOA dues is the same. So your total monthly savings with Ladder Up versus FHA is about $169 a month in this scenario. Now looking at how much cash you need in order to close, you've got your down payment in both cases. So with Ladder Up, it's a little bit smaller because your loan amount is larger. Okay, closing costs is going to be pretty close to the same. You'd want to talk with a lender about the details of what closing costs would apply to you. I just used 3% as a generic factor here for illustration purposes. Okay. And then you don't get any closing cost assistance necessarily with FHA unless you're using some kind of an outside program. But with Ladder Up, it comes with between $20,000 and $50,000. And your question should be, Caleb, why is there only $9,900 here in closing cost assistance? Well, the reason for that is because you can do an interest rate buy down to get this low interest rate up here. So that's how I put that together. So the lender said you could put 1.6% of the loan amount in up front and use that to get this low interest rate. And this is what's remaining after doing that from the $20,000 like lower assistance amount. So that would help you out with closing costs. So then if we have tallied all of that, your cash needed to buy this condo at the same price with FHA would be about $42,000 with FHA. And with the Ladder Up program, it would be about $29,000. So that's $13,000 less cash needed with Ladder Up and $169 a month less in monthly payments. So you can see why I think that this is a really cool program. What other requirements are there? Many assistance programs have tight restrictions on the maximum income that a buyer can make. And for the Ladder Up program, the maximum income ranges between $292,000 and $387,000 a year here in our Southern California counties. So that's a lot less restrictive than a lot of other programs, which is one of the things that makes this interesting to me. And this is a huge advantage for first-time home buyers, but also possibly for buyers that are just moving from one home to another. So the only requirement is that you can't own another home at the time that you close a home using this program. And you also need to have a 660 FICO score and take a home ownership course. So theoretically, you could sell the home that you're in now. You wouldn't own it at the time that you're closing on the new home. You could close the new home with this loan and you could still use it. So you can see why I think that this program is super cool. I would love to help you understand it better, so feel free to reach out to me. You can message me here on social media, or you can text me at 909-576-0695, or call me there as well. Or you can email me at caleb@hansonhomes.net. Looking forward to connecting soon.